The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 9th, terrific Tuesday edition of the Trader's Edge show. Yeah, that's the show that I'm doing. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful to be present here with you today. I'm grateful for your presence. I'm a little tired after that travel, after getting back at about midnight last night. Anyways, I'm back in the game. We're back in the game. Feel free to give us a call at 877-927-6648. If you can't give us a call, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question. Of course, inside the Tiger's done well. Any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 210 points. She's trading at 23,352. S&P is off 22. NASDAQ 100 down 1 3/10%. 86 points to the downside. Russell's off 14. Semis are off 3% or 37 points to the downside. Leading the charge, the upside is Sage Therapeutics, $31 or 50%. Priceline is up 20. Overstock.com up 9. That's 22%. Roku up 43% or $8. So this thing's moving to the upside. To the downside, it's Google leading the charge dollar-wise, about $21. You've got Transdigm Group down nearly 21. INC Resch Holdings, that's down $15. Regeneron off 15. Charles River Labs down about 15. Plenty to look at. Of course, what I want to look at is what you want to look at. And the first request that came in was to go take a look at the NQ. So let's take a look at the NQ and see what it is that we can see. Right now, that's off 81 points. Let's look at the daily chart first. Let's take a look at the daily chart. And what we can see here is that you've got the nice little, well, you've got a key reversal session inside of the NQ. You have a bearish engulfing session, and prices trading below Stevie's red line. That's 62.85 and change out there. So 62.85 is the number. If price closes above that, then really you'll have a bearish reversal candle, but the trend, it would still be in place out here. If price closes below 62.85, then you could be looking to move down to about the 60, we're going to ballpark this, around the 60, 70, 60, 80-ish area would be the next level of support. So 62.86 basically is the price to take a look at. Now, I said maybe price is going to close above that. I said watch for that area. I don't know if it will or it won't out here. But if we do take a look at the 30-minute chart out here, so we're going to go from a daily to a intraday time frame. What we can see is during the last half hour, just as I was coming on the air, what you had was the formation of a hammer candle. Now, there's an A to B equals CD pattern that is completed, but more importantly, price has been moving lower with less relative energy. So when the actual high came in on a 30-minute time frame chart for the NQ, you had the exact opposite pattern. See, my system here automatically draws these black diagonal lines, either from lower left to upper right for tops and upper left to lower right for bottoms. I knew I could figure that out. And that, excuse me. So it's a very reliable pattern out here. Now, here's the deal. If, in fact, this is the so-called bottom for the day, And if there's going to be a move where it's more than just a bottom for the day, we'll see price close above Stevie's red line. Now, on this time frame chart, it's right around the 62.82 level. It's a little bit lower than that, but we're just going to call it 62.82. What we do know is that as of 12:30, between 12:30 and 1, was when we saw the bulls try to flex their muscle. So they are trying to identify what, in essence, here would be a Gartley buy inside of the NQ. Now, we've gone from a daily to a 30-minute chart, and I had some appointments this morning, so I really just jumped back in the seat. So I'm looking at these charts fresh, just as you are, to get my head wrapped around, hey, what are these markets communicating to you and I just past 1 o'clock in the afternoon? So one of the other things that we can take a look at, and there's several out here, but one of the things we can take a look at with regard to the NQ is go jump in and take a look at the NDX 100. Now, here is the market breadth for the NDX 100 as of 1:11 in the afternoon. And what you're looking at a green line and a red line in the top panel of my screen. The green line represents the number of issues, or on a percentage basis, the number of issues on a percentage basis where price is still above the top of the box. And the red line is representing the number of issues trading below the box. We still have not had, even with this nice sell-off that you've seen so far, as of 1 o'clock in the afternoon, really 12:30, when that so-called, at least short-term bottom has formed out here. We still do not have a bearish cross from a daily standpoint out there. So that's really what the NQ is doing. So what's our call? Look, what's going on here inside of the NASDAQ and inside of the markets is just creating another short-term bottom. At least with regard to the daily time frame inside the NASDAQ, there's not anything here that this is other than some type of emotional sell-off. There's not been damage inside the NDX 100, the type of damage that would suggest there's a change in trend that is in place as of 1:13 in the afternoon. So I hope that that helps you out with regard to the NQ. Now, what else should we take a look at? Well, you already know the answer to that. You say Stevie's back in his seat. He's back from a bit of a respite, a bit of a vacation out here. And you know where I'm going with the next chart, don't you? At least 50% of you do. Probably 75% of you know what I'm going to bring up next. Exactly. The spot volatility index, as we speak right now, is up 18%. Now, I do not know where it's going to end the day, nor do you. But what we do know is if we go take a look at this chart here, and the spot volatility index has a one-day rate of change greater than 10%, what is it that you can anticipate and expect overnight and going into perhaps the morning session as well? A bounce or a bottom. Now, if you're taking a look at this chart, you're going to see two colored arrows. One is green. That's not the one we're focused on today. The other is blue. And what occurs out here with regard to these extreme emotional moments inside of the market, and that we're taking a look at is with regard to the spot volatility index. When it jumps for whatever reason, I don't know the reason. I don't have to know the reason. You don't have to know the reason. What you need to know is the pattern and the percentage odds that the market is either bouncing or bottoming when you get that signal. And as we speak right now, well, that's the signal as of 1:14. So no bearish crossover inside of the NDX. The S&P 500 potential spot volatility index greater than 10% rate of change. Something to think about. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 174, S&P down 18. So James writes in and says, hey, Steve, I love your show. Do you think the down day today is a buying opportunity? So let's take a look at what it is that we do know, James. And so we just took a look at the and the question always that I would have for you would be, what's your time frame horizon out there? So if you're more of an intermediate, longer term standpoint, you would use today, as we speak right now, as an absolute buying opportunity. So I don't know what your trading style and time frame is, and that's really important in being able to answer that question. But we do know inside the NDX, which is one of the leaders to the downside. We haven't looked at the SOX yet. That's the other leader to the downside. We do know that market breadth hasn't crossed negative. We know that on a short-term basis, what we're going to see is some type of bounce unfolding. You see, buyers and sellers have just but one role, and that is to paint signals for you and I in multiple time frames. In this case here, it's a 30-minute time frame, and they tell us what they are thinking. Especially now, they tell us what they're thinking associated with patterns. On their own, they're basically not worth a hill of beans out here. Well, at least a hill of beans, but that's not the type of information that you want. You want to know what's going on as these patterns are forming. So looks to me like we're going to get that bounce into that 6282 level. We'll see what happens at that point in time. That's inside the NQ. If I take a look at the S&P 500, and you said, is this a buying opportunity? It also depends on what it is that you're buying. What index? Is it the Russell? Is it the S&P? Is it the Dow? So that is also something important to take a look at. If we look at the ES Mini as an example, here's how we're going to answer that. We're going to answer that based on where we left off as we went to that break. We said the spot volatility index, if it has a one-day rate of change of greater than 10%, right now you're at 15%, then you would anticipate or expect a bounce or a bottom. Now, what happens if we see more bounce in the market? If we take a look at the ES Mini, it formed in essence the same pattern on a 30-minute time frame. This is not rocket science. This is just the way that these patterns work. We can see the last intraday 30-minute high that was formed out here in the ES Mini. That formed with one of these price relative strength divergent patterns. Same bottom at about 7 o'clock in the evening. This was, when was this? Looks like January 17th. Now what we can see here is we have the next one that is formed. Nice little piercing candle. So the ES Mini is on its way up to test Stevie's red line, right around 25.75, we'll call. We're only 2 points away from that. If we overtake that, we get back inside the 30-minute profiles. That says price could hop up to the 25.80 type level out here. So what we're going to be watching for, though, is that inside of the ES Mini, inside of the S&P, inside of the Dow, we also have these patterns. So it depends on what time frame it is that we're taking a look at. So on the daily chart here, this could be a buying pattern based on those conditions being the spot volatility index having that one-day rate of change greater than 10%. There's something else that we can take a look at. So market can bounce. The ES Mini or the S&P, the market itself, can take back some of those losses, and we could have a spot volatility index that would be less than 10% one-day rate of change, and still end up with a bearish engulfing candle on a daily chart, a price relative strength divergent pattern. Then my answer to you, James, would be, no, that might not have been a buying opportunity, because we will have had that same pattern that you and I were just looking at on an intraday chart also form on the daily. So I'll know better, or could give you a more educated answer to that. We get to 4 o'clock this afternoon. We could take a look at what candle formation do we have out there, where's the spot volatility, and a number of other things out here. One of those other things, by the way, is not just the one-day rate of change, but where in the volatility index, let me see here, are we with the 3-month indice that tracks that information? And that here is taking a look at this chart, and that, by the way, is ticker symbol VXV. So there you're going to get a 3-month volatility gauge, and when the 3-month and the current spot are in agreement price-wise with each other, meaning in my chart here I showed as dividing one by the other, and when we get to a single digit of 1, well, that also helps to set a bottom in the market. Now, if you were to ask me where was this reading at about when I sat in the chair around 12:30 and started getting things together, you were above 1. But it's all going to be an end-of-day reading. You'll see some other green arrows on my chart that help you to identify bottoms that form inside of the S&P 500. Why does it work? We don't know. We just know that it does, and that you should at least not ignore it. Now, you can see the spot volatility index right now trading 11.15, the 3-month at 11.96. As I say, 45 minutes ago, maybe an hour ago, those two were really equal with each other. So, James, and with regard to the S&P 500 and its market breadth out there, we might as well go ahead and take a look at it. You can see that this still is in what we will call bullish formation. There is no bearish cross. There are 179 issues with price trading above the top of its box as we speak right now, 123 in the afternoon, and 153 with price below the bottom of the box. So this is still bullish with regard to its signal as far as the S&P 500. So you've seen the S&P, you have seen the NDX 100. Hope that that helps you out. Now, what else can we take a look at to get a gauge on the markets out here? Well, one of the things we can do is, or I can add this to that question, James, and that is watch the price level of 1034. So market gives back some, the VIX, the spot volatility index, pulls back further. If the spot volatility index closes above 1034, then that is saying, no, not necessarily a bottom just yet. So it's another factor that you might want to consider putting in there. A really nice, fat, juicy bottom, the kind that you want to see, the kind that I want to see, the kind that the world wants to see out here is we want to see this New York Stock Exchange advanced decline oscillator reading get down into the minus 150 level. Now, the reading right now is only minus 116. It did not get down. Well, I don't know if it did or it didn't because I was gone. But I don't believe it got down to the minus 150 level. You might say, why minus 150, Steve-O? And the reason is because when price gets down there, that is where you start looking at other patterns to form, because that's when nice, juicy bottoms have formed, or at least oversold readings where there's a good bounce inside of the New York Stock Exchange. So that, too, is something that I would look. But even if it doesn't, though, as we speak right now, let me see if I can do this on another chart. Let me see if I can, how quickly I can find it, though. So just bear with me for a moment while I look, because I don't want to really mess with this chart when I can mess with something else and it won't really mess up some of the charts that I use. So let's see, New York Stock Exchange, by date. Come on, New York Stock Exchange. Come on, where is it? Advanced decline oscillator minus 150 page. I think that sounds like it. So as we pull this, there we go. Because we have in this case here, I've already got it blown up. If you're watching us on Tiger TV, you can now when bottoms form out here. One of the cool things about utilizing this tool in this indicator. Let me get a line out here so I can paint it. We'll use red lines. When you start to see price moving lower, as it did back here in August 2017, yet we start to see rising bottoms inside the advanced decline oscillator reading. That too is another good indication of a bottom that is forming inside the New York Stock Exchange. Now you can't trade the NYSE, but you can certainly utilize it for good signals. Well, right now what we can see is we've had a lower intraday low. I'll have to go back and check that out. I think we have, and we can see we also have a rising bottoms. And we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 165. S&P is down 17. So question that was posted in the den, if I read it correctly, was in essence asking, is there anything more reflective in a spot volatility index that has a one-day rated change of, let's say, 20% or higher than 20% versus the 10%ers out there? And my recollection because I had once done a test on that. My recollection was no more. That 10% for some reason was the threshold. It's the one that I use out there. But look, you can download all the data and run it through the system. There are many fewer from a sample size instances where you have a one-day rate of change of 20% or more. And because I used to think, hey, maybe that, when we had those 30, because we've seen 30%ers and things of that sort. No, I haven't really seen where the 10%ers work really well. The one that works really darn tootin' well, where'd darn tootin' come from? But the one that really works well is taking a look at the spot versus the 3-month indice. And when those two equal 1 or greater, they've been really good at, not all the time, because I can find failures out there, but certainly in the past couple years, it's really worked well out there. So just part of the arsenal of tools. So Mike P writes in and says, I purchased a call on Equifax, EFX is the ticker symbol, this morning for next week's earnings. And that's ballsy. Mike, but let's go take a look at it out here and see what Mike is doing. So if we take a look at the 3 time frame chart for Equifax, we all know the pitiful story of that entity, but this is about making money, and you can see the huge weekly decline, monthly decline that we had out here really in September. So here's Mike. Here, Mike, is what it is that you are at least looking for, and what you want to see. And right now, you've seen over the past week or so on the daily chart, here's what I want you to take a look at. And that is that the last market profile that formed on October 30th, so the beginning of this month out here, formed below the prior profile. I promise if I get some sleep out here, I'll probably be able to speak intelligently, or at least my words won't slur. However, I did spend a lot of time at wineries out there, but that should have worn off by now. In any event, what you want to see, Mike, is you want to see this get above the top of the box. That's 111.18. If it doesn't get 111.18 right now would be your resistance level, and we're taking a look at a daily chart out here. So, and now I can give you. What else do you want to look? Where's your go, no-go zone out here? I would have to say it's probably Stevie's red line. It was this morning's low, right around 106.04. You have a price oscillator below 0. If you get below Stevie's red line, you're going to turn that price oscillator down, and you don't want to see that for the call option, especially with profiles giving you that message as well. Now, what happens, Mike, if it gets above 111.18? Out here? Well, then we go take a look at a larger time frame, such as a weekly time frame, which is a bullish profile out here, bullish structured profile, but the bottom really hasn't been tested, 95.19. I say bullish structured because the center, which is at 100.80, is closer to the bottom versus the top. So this says that you close above the daily top of the box, 117.61 may be all you get on this. I don't know what your call option is and so forth, but utilize those numbers as your gauge or your guideline for your trade in EFX, Equifax. EFX, though, Special Effects. What a great band they are. I say that only because I had I got all my music still on my original iPod. And the computer that had all of that stuff, who knows where that is and where I put all those files out there. So I still am running with that thing. And, you get these long flights back and forth to San Francisco. Hey, airlines. How about airlines out there? I flew back on United. They're crap. That is a crap airline. At least the jet that I flew on their service. Now, that is in comparison to JetBlue. Holy cow. Talk about those guys really do have their, stuff together out there. So 1 vote for JetBlue, no votes for United. So United doesn't just have problems. What's this guy's name? Munoz, with regard to pulling people through the aisleways out there. Man, I mean, on long flights like that, they should really have their stuff together. They don't. That is POC Airlines out there compared to JetBlue. Man, they had it together. In any event, you don't want to hear about that stuff. So what else is it that we can take a look at out here? And I think, well, let's go take a look at gold. What's Goldilocks doing? And that's a great question. What is Goldilocks doing out here? So as we take a look at it, it's trying to actually at least have a short-term change in trend. Now, the price point that it's trading at right now is 1286.80. And a key level for it is going to be 1287.10. I mean, you're talking 30 cents. It spent all day right around the top of its daily profile out here and hasn't been able to bust through it. So, I don't know how to interpret it. I mean, I do know how to interpret it. I interpret it as, hey, it's significant resistance. What I don't understand is why it's significant resistance right now. And the reason why I don't understand that is because the Japanese yen is off the bottom as we speak. Here's your long-term consolidation. You've been tracking this for many months now. And as we take a look at it, that bottom's been tested and tested and tested. And quite frankly, it was starting to get me a little bit worried that, in fact, it wanted to bust out the lows. But that does not appear to be the case. Nice wideish ranging bar today. We can see price came down early this morning, tested its red line, Stevie's red line. It's well up above that. That's acting like a trampoline. And it's possible that these correlations are beginning to come unglued out here. I don't know if that's the case or not. But if we go take a look at the 10-minute chart, that probably will tell us. Let's see if I've got that handy here. If I have it anywhere here. I'm sure I do. I'm sure I do. There we go. Yen, gold, bonds, 10-minute chart. The bonds chart is on its own. I don't think that the 10-year or the 30-year Treasury T-bond futures are really following along what the yen is doing as we speak. As I take a look at this chart here, I don't see that same. We're going to kind of give it a 50%er out here, but the yen and gold direction. Look, it's a directional indicator. You know, it's not a tick for tat type of a tool out here. It still looks pretty good. So if that's the case and the yen is really breaking out, well, then it's suggesting to you and I that gold wants to break out too. It hasn't confirmed that message, and closing above the top of the box would, in fact, do that. But as we speak, as of 1:37 in the afternoon, we've got to kind of give it a scratch our heads, because we're not certain that it's going to be able to do the heavy lifting, which is to close above 1287.10. Now, look, if it can do the heavy lifting, if it can close above 1287.10, then it's got 1317 written all over it. Now, that is only about another, 27 plus change, $30 or so. But that would be the move that you would anticipate or expect inside of Goldilocks out there. If we take a look at silver, I haven't looked at silver, but it's down 14 pennies right now. So what's up with high-ho silver out here? And if the daily chart populates, go ahead, take your time. We're only going to break. Yeah. Hey, silver's in a mess of trouble if it were to close below 1692. It's trading at 1699 as we speak right now. Those metals, something to think about. Yeah.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 159, S&P down 17. The golf guy sends in a message and says, Steve, can you look at GE to see where it may eventually settle out at to the downside, if not there already? Absolutely. So let's go take a look at GE. And I did have a nice opportunity to play lots of golf out in the northwest area of California. Oh, it was beautiful golf out there. A bit chilly. I will tell you, I teed off on Sunday morning. That was with the time change. Thank God for 1 hour out there. And we were the first group off at that day. We played Half Moon Bay, which is the ocean course, which is an amazing golf course. They only charge $140. I mean, that's pretty cool compared to Pebble Beach and others a little bit further south. But if you've never been out there, I can't say much about Half Moon Bay itself. But the golf course is just simply amazing. I mean, talk about ocean tracks out there, just beautiful condition and just, but cold. I had to wear my long underwear. Of course, you would expect that coming from Florida, and I was pretty comfortable. So the question, though, from the golf guy, and a great round of golf at Pebble Beach. I'd like to be able to repeat that again. In any event, if we take a look at GE, golf guy, here's what we can say is that a couple days ago, this is on the trading session of November 2nd, you did have a little hammer candle that formed, and that was after a TD 9 count. TD set up 9 count. Now that's where you have where you have candle sessions where you can find 9 consecutive closes below the close 4 bars earlier. You try to say that after taking almost a reddish eye back to from San Francisco to Florida, and that's saying a lot. But the point is that can often be a point in time where you see a change in trend. Now, for how long a period of time? In the case of GE, you can also see a bullish structured box out there. Now, we'll go check my other charts out there just to make sure, because I trust the profiles more on the E-signal charts than they do on the Ninja Trader. But it should be good here. And but price isn't able to. It needs to trade above Stevie's red line, for goodness sakes, and it hasn't done that. What you've seen out here, golf guy, is a counter trend move in GE so far, right up to Stevie's red line. Boom, it nails it, and then it finds resistance. You've got to see price close above it, which is really where it's trading at right now, is about 2004, 2005, somewhere right around there. Then you could see at least a bounce into the 2099. Now, when GE last formed its high out here, just to show you how this works in the opposite direction, was on September 25th, or one of the highs that we're taking a look at. And you'll see that was a TD 9 count. A TD setup 9 count out there. So they are worth noting, and especially one takes place here with a hammer candle. So now I don't know what your time frame was that you were taking a look at G, but again, just to make sure that those profiles are correct, let's go switch over to our 3 time frame chart. Here we go. And let's take a look at GE. And yeah, the profiles are just fine that we took a look at on the daily. So, but I think you're trying to get it from a, if I'm not mistaken, maybe from a more of a longer term play. And in that case here, if we just simply switch this to the weekly chart, we're not going to see, well, I don't know what we're going to see. Let's go see what we're going to see. Now, we don't see that bottoming move. Yeah, we need to see a close above 22.01 out here. So I'm not seeing it. I'm not seeing it in the cards just yet. We're not seeing the type of patterns that you and I like to look at. So maybe you ought to look elsewhere out here. And there are many other places, many better places, I think, to look versus General Electric, which is just simply so weak. I saw another email that came in here. This here request, if we have time to go take a look at ACBFF. ACBFF. What in the heck is ACBFF out here? Best Friends Forever, I believe. What I don't know what the AC. It's an inexpensive stock, that's for sure. It's $3 buckaroonies out here, but hey, man, this thing is breaking out. So you're in. You sold this out today at 310. Well, bless your heart for doing that. I'm not sure why, but let's go see if we can figure this. Well, let's leave this chart. Let's go take a look at what this thing is doing, because it's had a strong week. So look, you're selling into strength, so that's a beautiful thing. But it's taking out a swing point. That swing point on a weekly basis is the one from November. I don't know what these guys even do. Oh, the cannabis company out there, ACBFF. I guess that's why it's Best Friends Forever out there. Cannabis is Best Friends Forever. What's the A for? Oh, I guess that's the Aurora Borealis out there. In any event, this equity is taking out the swing point from the week of November 14th that had 7.5 million. You're at 12.4. So this, and I mean this is no pun intended, but it's going higher out there. Put that in your pipe and smoke it. Be careful though. Even on the monthly chart, this thing is looking pretty good. So because we're only October. No, we're November 9th. The month of November did 18 million shares. You're already at 15 million shares. So a nice trade out there, Mike. Yeah, you made money, and you're looking for a re-entry. You sold it at 310. It's at 316. Hey, hop on board, or buy fewer shares or something like that. But looks to me like winner out there when we take a look at ACBFF. That concludes this part of the show where we've answered all of the questions that have come in thus far. But you too can get in on the action. All you have to do is send us an email, steve@tfnn.com. Inside that heading, though, you've got to put radio show question. Otherwise, it might just totally get right past my my excellent viewing of my iPhone. I've got to get a new one because this thing was overheating. I thought it was going to explode on the airplane last night, which was not a good thing, so I turned it off because, after all, you are in an airplane. Don't need anything exploding inside of a airplane out there. So, oil. Somebody asked for oil. I didn't get to all the requests out there. Are we in the December contract, guys, gals out there? Is that what we're in for oily out here? Let's take a look at Stevie's. Synthetic tool out here because I like the profiles better. Yeah, so we're in December. Thanks, Matt. Are you? And I don't recall. I think it was just an analysis of oil and what it's doing out here. What might help for me to do that too is let me go to the continuous contract on my other charting system out here because I don't have December handy. But first and foremost, if we take a look at 6240 daily and weekly charts here for light sweet crude, you're going to see those so-called green shoots. Those are the green bars. And with the exception of the 60-minute chart where price is trading just below 57.32, it looks pretty good to me. looks really good to me when we take a look at it. Now, this week, let me put the continuous up on my screen. It should be the same, but I have to go back and just make sure. But if we take a look at it, we were just talking about, I don't recall which equity it was, but we were taking a look at those TD9 counts out here. And this week, thus far, looks like you're going to be in count number 9. And oftentimes that can be where the market, this is a weekly chart, by the way, that you and I are looking at. So it could be getting a bit tired out here, even though it's taken out its most recent highs. Could be. Not saying it is. Could be. But you know what I see? If Light Sweet Crude is really making a high, the price is going to come back on a weekly basis and test Stevie's red line. And then it'll tell us. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
What do we have here? We've got the Dow's off 150. S&P is down 16. If we switch over, we started off the day taking a look at daily and 30-minute time frame charts out here. And so the 30 was letting you know as we came on the air that the market had confirmed that was going to be at least a bounce that was taking place. And we knew that just simply because of the patterns that you and I trade in, by paying attention to those patterns and the candlesticks that go along with it. And what we suggested to you was that the way that this pattern operates, we were going to see a bounce up into the Stevie's red line area. Now, that has transpired thus far as 1:54 in the afternoon. If the sellers are present, this is where they're going to go ahead and strike. They're going to strike right now. Now, there's a brand new profile, by the way, that formed here on the 30-minute chart. It's pretty wide. It's a wide box. I want to give you some newer figures out here. It goes between 62.50 and 63.13. The box itself doesn't have a bullish or a bearish structure to it. It's very balanced, so to speak, out here. I could use a little bit of balance. So if sellers are going to strike, this is about the time when they're going to strike based on what we see inside the NQ. And if they don't strike here, they get overrun by the buyers, by the bulls. 63.13 is the price level. Jim writes in and says, Steve, how was your trip? Did you see much fire damage in Napa? And the answer is, I saw some fire damage in Napa. One of the first wineries that we were supposed to go to was Signorello, but that had burned down all the way to the ground. So that was the worst of it. For the most part, most of the fires you saw were up in the hills in the Napa, in the primary vineyard area, not where most of the wineries have their facilities out there. And I heard some great stories, some amazing stories, and maybe I'll share some of those with you tomorrow, because I know we're about to go off the air. I didn't really want to waste today's time since I haven't been here for a week or so, but some cool stories about what some of the vineyards did, some of the hotels out there. You know, the human stories were really the most important ones. So look, folks, thanks so much for being here. Stay tuned. Your favorite polar bear and mine. He's up next. Then you've got Tom O'Brien and Andy Heck to take it on home. We'll be back with you on Fantastic Friday. Take care.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies.